and we'll distribute CPE certificates to those people who qualify probably within a week's time. If you're having any trouble with today's webinar, I'd ask you to please send an email to support, SUPPORT, at XBRL.US. And with that, I'll move our slide ahead here and let you know that today we're going to be hearing from Louis Mathern. Louis is the Chief of Taxonomy Development at the FASB. He's going to be answering questions along with Mike Willis, who is Assistant Director, Office of Structured Disclosure with the Securities and Exchange Commission. They're going to be participating in this question and answer session. Campbell Pride, President and CEO of XBRL US, has a number of questions to pose. If you, in addition, have questions during the course of today's presentation, please use the Q&A button on your console to queue up additional questions for our panelists today. With that, I'm going to turn it over to Campbell Pride. I'll be back in just a little bit with the first of our CPE questions. Campbell?
Thanks, David. So we've got a number of questions today that we're going to go through. So, Mike, I just want to check with you before we get going if there are any disclaimers that you need to make.
Campbell, thank you for that. As you know, the Securities and Exchange Commission, as a matter of policy, disclaims responsibility for any private publication or statement by any of its employees. Therefore, the views expressed today are my own and don't necessarily reflect the views of the Commission or other members of the staff of the Commission. Thanks for that, Campbell.
Thank you. Okay, so David, if we go to the first slide, please. And the first question we had, now just so we're going to go through in today's webinar, we've got a number of questions we're going to go through, and these are questions that we've collected over the last month or so, that specific questions that folks have related to the SEC reporting taxonomy. So Mike, I'll kick you off the first question. Can FPIs continue to use tags from the 2017 US GAAP taxonomy? And can a filing use tags from both the SRT, that's the SEC reporting taxonomy, and the 2017 US GAAP taxonomy?
Sure, Campbell, good question. So as outlined in our FAQ, the FPI should only use the 2017 GAAP taxonomy with the 2017 IFRS taxonomy. When adopting the 2018 IFRS taxonomy, FPI should use the SEC reporting taxonomy, or SRT for short. There is an exception we'll talk about a little later when using the US GAAP taxonomy is appropriate, but that's in a very narrow, and only FPIs, they should only be using the SRT would be those that are using the 2018 IFRS taxonomy, and they would use that if and when it's accepted. And for FPI filers, there's a kind of a sequence here for thinking about identifying elements, and that would be check first with the IFRS taxonomy, check second with the SRT, and if it's not in there, then extend. So that would sort of be a framework for thinking about how to pursue these different taxonomies.
Okay, thanks, Mike. So if we go to the next question, please, David. And this one's a little bit longer, but we're just basically, just to clarify your previous point. So some tags in the US GAAP taxonomy, and are neither in the SRT nor the IFRS taxonomy. And we've got a list here, for example, which I think everyone can see on the screen. Is it acceptable? The question is it acceptable to use tags from the US GAAP taxonomy if you're a foreign private issuer and you're using the IFRS taxonomy?
Yeah, the short answer is no, with the minor exception we'll get to in a bit. The short answer is no. The basic principle here is that filer FPI should start with the principles basis that you're reporting in and follow the modeling constructs that are provided by that taxonomy. The examples or elements here that may not be in the IFRS taxonomy, the FPI filers should extend for these elements. They should not use these elements that are in the US GAAP taxonomy at all. So this is a list of elements that are in the US GAAP taxonomy elements that should not be used by FPI filers that are using the IFRS taxonomy.
So Mike, this is Louis. I'll just add a little color here. But before I add the color, I just want to say my disclaimer is similar to your disclaimer. These are my views only. With that out of the way, the last item that's listed here, the property, plant, and equipment useful life. So, this would suggest, well, we don't have this in the IFRS taxonomy, and you're saying don't use it for the US GAAP, so you should extend. So there's a nuance here in that the IFRS taxonomy does have an element, useful lives or depreciation rates, property, plant, and equipment, that would work here. Now, it happens to be a string data type as opposed to a duration type, which is what the US GAAP element is. But it can still be used. It will still comply with the EFM rules to use that type. So that particular IFRS element. We'll talk about this a bit more later, though.
Okay, thanks, Lewis. So David, if we could go to the next slide. So, and I think you guys may have covered this a little bit, but can you clarify what is the appropriate sequence for identifying elements when you are an FPI? And someone had asked, is it check first, IFRS, check second, SRT, and then extend?
The short answer is yes, that's exactly the sequence. I mentioned that just now. I think the question might originally been, check with the IFRS, then check with the SRT, then check with US GAAP, and then if it wasn't in those, then you'd extend. And that's not the right answer. The right answer is what we have here, which is really not to use the US GAAP taxonomy at all, but rather to extend for those elements that you're trying to disclose. So it's IFRS, then SRT, then extend if you're an FPI filer using the IFRS taxonomy.
Okay, thanks, Mike. So David, if we could go to the next slide. So this question really relates to modeling, and we're seeing a lot of filers who have been, well, people who've been doing US GAAP filings, and now they're doing IFRS filings, and this question had come up, and it says some footnote disclosures are modeled differently in the IFRS taxonomy versus the US GAAP taxonomy. For example, the roll forward for some reserves uses dimensions in one taxonomy versus line item tags in another taxonomy. Which is the preferred modeling approach? Should a foreign private issuer structure its XBRL using the modeling from the IFRS taxonomy? And then if US GAAP tags are applicable, select those tags to supplement the IFRS modeling.
Yep, so it's May 1st, but it's going to sound like Groundhog Day. Again, start with the principles basis you're reporting in and follow those modeling constructs provided. So in this example, we'd be starting with the IFRS taxonomy and using those modeling constructs. We would not be using US GAAP modeling constructs. So the sequence again here is IFRS first, second SRT, and third extend. And Lewis, I'm guessing you can have some color commentary here on an example.
Yeah, well, I'll just say that, it can be tempting, when you're looking at one of these disclosures that, and it might have some holes in it where you need to supplement, and you see something in the US GAAP taxonomy that might work for that purpose. But, most of the time, it's just not going to work well. And there's a couple of reasons. One, you've got different modeling in a lot of these cases. So you've got axis versus line item construct. And in that situation, it's simply going to be difficult to fill in with line items from the US GAAP taxonomy because they were constructed anticipating a different modeling. And so maybe you can shoehorn it in, but the results might not be what you were expecting. And particularly for the users, the results are unlikely to be what they're expecting. And second, and perhaps the most important, is the GAAP taxonomy elements are usually based on US GAAP. And to use them in a IFRS reporting, in a report based on IFRS standards would be inappropriate from a basis of reporting perspective. So, again, back to your comment about Groundhog's Day, Mike, check first the IFRS, then SRT, and then extend.
Thanks, Lewis. So if we hear the next slide for the next question, that'd be great. So the SRT contains some axes for which The only guidance for their use is provided by the FASB, for example, the ownership axes and the consolidation items axes. Are these intended to be used in the same way and have the same meaning for an IFRS filing as for a US GAAP filing? So maybe Lewis, I'll give it to you first.
Yep, thanks. Thanks, Campbell. So the short answer is yes. The meaning is as what we provided in the SRT. It's for SEC reporting concepts, and they are intended to be agnostic to the underlying reporting principles. But sometimes the definitions might not be as clear from a non-GAAP or IFRS perspective. So, the examples we have here, ownership axis and consolidation item axis, the ownership axis definition, the first part of it, I think, is very clear. It says information by name of entity in which ownership interest is disclosed. But the second sentence says excludes equity method investee and named security investment. So, the IFRS does have that notion of equity method, but the definition might be slightly different. So there may be a little bit of ambiguity there. And so we go back to the principle that Mike has stated at the beginning, which is start with the IFRS taxonomy. And if there isn't a better choice available or an appropriate choice available in the IFRS taxonomy, then use the SRT axes. The consolidation items axis is a little bit different in that was modeled to be used broadly. So in a lot of different modeling scenarios, while the IFRS taxonomy has a similar element, but as I understand, is specifically designed for the segment disclosure. So you probably should be using that IFRS axis, segment consolidation items axis for the segment disclosure. But assuming there isn't a better fit in the IFRS for these other use cases, that's when you would then use the SRT consolidation items axes. For these other disclosures requiring an axis for a similar purpose, such as an elimination or reconciliation required for geographical disaggregations. So again, start with the IFRS taxonomy. If it doesn't seem to fit, then look to the SRT. And of course, if that doesn't work, extend. Campbell?
Thanks, Lewis. So now I'm going to hand it back to David, who's going to do some CPE questions. Oh, we've got one more question. If you are a US GAAP filer that uses and I suppose this is probably a question for you, Lewis, and to me to some extent. If you are a US GAAP filer that uses the US GAAP taxonomy and the SRT taxonomy, software applications allow you to search both simultaneously. If you are an IFRS filer and use the IFRS taxonomy and the SRT, are you required to search each taxonomy separately?
Right. So, again, for US GAAP filers, they really shouldn't see a difference in that we have included the SRT taxonomy in the US GAAP taxonomy. So unless a US GAAP filer looks really, really closely, they're not going to notice any difference at all. For the IFRS filers, it really is going to come down to how the service providers they're working with choose to provide that to them, or what tools the foreign private issuer is choosing to use here. It really depends on how they build it together. Right, Campbell, do you have any color you want to add on that from a vendor perspective?
I think this is really a vendor specific or a tool specific question. So, and the tools I've seen, they handle them as if it's one taxonomy, and that's what you would expect. If you're doing this more manually, then obviously you're going to have some mechanism to search through them. But I think today, if you're using a tool and you have to search them separately, you probably want to go back to the software vendor and ask them, can you combine these?
All right, we'll see you later.
So now let's go back to David for the CPE questions this time.
Great, thanks, Campbell. And I'll ask anyone who is attending today for CPE to perk up, take a look at your screen. I'm going to launch the first of our 4 polling questions. We're actually going to do 2 questions here. While that's going on, Campbell and Mike and Lewis, if you would take a look, we've received several questions just in this first few minutes of today's presentation. On your screen, for those of you attending for CPE, please take a look at the question. When did the SEC accept the SEC reporting taxonomy? Was it March of 2018, January of 2018, or March of 2017? We're going to move pretty quickly through these CPE questions, so I'll ask you to please make your selection in the next couple of seconds. And then we'll close this first one off. While you're finalizing your decision on when the SEC accepted the SEC reporting taxonomy, we did receive a question about making the slides available. They'll be posted right along side of the replay on today's event page. So look for those at some point this afternoon to appear on that page. We'll also send a message to anyone who registered for today's webinar with a link back to that replay. I'm going to end this first polling question, and I'm going to move to our second polling question for this segment. Which of the following is not contained in the SRT? And your options are elements needed to meet SEC requirements for financial schedules required by the SEC, dimensional elements whose underlying recognition and measurement are not specified by GAAP, but are elements commonly used by GAAP filers, or elements that have been deprecated from the US GAAP taxonomy. A little more thinking here. Which of the following is not contained in the SRT? And again, for those of you that are participating for CPE, please take a look, make your selections, or selection, excuse me. Take just a few more seconds here. Which of the following is not contained in the SRT? All right, I'm going to end the polling, and Kimball, I'm going to hand it back to you.
Thank you, David. And the answer for that second poll question was number 3, elements that have been deprecated from the US GAAP taxonomy, and 81% got that one right. And the previous answer, David, what was that? I don't recall which number?
The previous question, when did the SEC accept the SEC reporting taxonomy? March of 2018, 71%.
Thank you.
That's correct.
Okay, so there was another question that we've had a couple of questions that have come in. One of the questions related to stockholders equity class of stock, class of stock axes. That is coming up, so you'll have the answer to that. A couple of people asked that question already, so Mike will answer that question in the next 15 or 20 minutes. Okay, so the next question, if we could go to David.
Kendall, do you want to answer some of these open questions? I thought one of them was really good, probably something we should have covered, the difference between the US GAAP taxonomy and the SEC reporting taxonomy.
Yeah, let's do that one now, and then we'll go back to the slides. So Mike, you want to take that one? And Lewis?
Well, we can all jump in on it, but I'll give you the short answer, and then maybe Lewis, you can give a longer answer. But the SEC reporting taxonomy is intended to address those disclosure requirements that are SEC specific. There's an FAQ on the website that explains what some of those specific items are. But that's what it's intended to do. It's not intended to address US GAAP concepts or IFRS concepts, but those reporting concepts that are specific to the commission. Lewis?
Yeah, and I'll just add that that is the primary role of the SEC reporting taxonomy, but we also included several other elements that were more broadly applicable So some of the items that we've discussed and will discuss, such as range, axis, and so forth, are elements that are not GAAP specific. They're not IFRS specific. They're not any principle-based specific. They can be used in any variety of ways. And so those are elements that we felt were most appropriate to promote to a higher level for non-GAAP filers.
Right.
Campbell?
Okay, so let's go to the next question, please, David. And this is related to the naming extension elements. So Lewis, and maybe probably best for you to answer this one, but on naming of extension elements, if you find an applicable tag in the US GAAP taxonomy that cannot be found in the SRT or IFRS taxonomies, should the filer create an extension that is similar to the US GAAP tag? And is there a preferred naming convention for the element name such that it is the same or very similar to the US GAAP tag? For example, there's an example here, ABC company specific disclosure, or IFRS company specific disclosure example. And all this is saying, should you be copying the tag and the taxonomy you want to use, but you're not using because of the guidance we just mentioned?
Right. Thanks, Campbell. So, first off, to be clear here, the extensions should be for company-specific disclosures, and companies should create them for their disclosures, as we've discussed previously. But there is no expectation to model using the US GAAP elements. We don't see a whole lot of utility in that, and so follow. Whatever conventions you think are appropriate. Now, for the extensions, you should use a similar convention as we use for the US GAAP, just the company name as the prefix, as you see in this example. But including the IFRS with the company name, that doesn't really serve any purpose. The US GAAP filer doesn't include US GAAP, so there's no real there's no real utility in including IFRS in the company, in the element name. Now, I will add that if your service provider is suggesting a certain name for your extension, that might be worth following, since they're probably doing the same for other clients. And to the extent that there's commonality in those extensions, that's worthwhile. Campbell?
Okay, thanks, Lewis. And then just to reiterate that, I think if anyone's using or consuming the data, I don't think there's going to be any expectation that when companies are creating extensions, they are necessarily going looking in the US GAAP taxonomy and then creating their extension based on an element name. So there's no requirement necessarily that this is not saying go and look at the US GAAP taxonomy, see if there's an element that's the same as what you would have under IFRS and use that for your extension name. So that's not something you have to do. Okay, next question. David, if we go to the next question. And this relates to labels, and maybe this is appropriate for Mike. There are no US English labels in the IFRS taxonomy. They are all English. In the US GAAP taxonomy, the labels are English/US. The EFM says that every tag should have an English-US label. So does this mean an IFRS filer has to create the EN-US label for every tag?
Short answer there is yes. Filers have to create those labels for each tag for reporting purposes anyway. So there's they're gonna have to create them all either EN-US or EN-EN. So it's one or the other. You have to do one, and so the SEC rules are you need to do the EN-US. This is an XML attribute. It's a simple thing. You just create it for each label. There is an EFM at your filer manual section. There's actually two of them that speak to this. If you're keeping score at home, it's 6.5.13 and 6.5.14 are the two EFM sections that actually address the question on labeling.
Okay, great. Lewis, do you have anything to add on that?
I have nothing to add on that.
Right. So going to the next question. The IFRS taxonomy and the SRT taxonomy have duplicate axes. For example, the IFRS taxonomy has the product and services, and the SRT has the product or services. Both have the range axes. The IFRS taxonomy has the geographical area areas axes, and the SRT has the statement geographical axes. How should the filer determine which one of these to use?
Well, it goes back to the groundhog theme that you heard earlier, which is, you know, stick with the modeling concepts or the concepts of the taxonomy that you're using. For FPIs, that would be the IFRS taxonomy disclosure concepts. So an example A here, where you're picking between products and services of the IFRS taxonomy or the SRT products or services, use the IFRS axes. That was the layout again. So it was choose first IFRS, then if it's not there, use SRT. If it's not there, extend. In this case, it's in the IFRS taxonomy. That's the one you should use. If we go to number B, it's in both. So again, easy decision, use the IFRS taxonomy axes. Then for C, slight difference in the language here, basically the same concept, but again, following the modeling construct that we laid out earlier, use the IFRS taxonomy first, since that's the place that you started with. To the extent there are conflicts between these, please write in and point those out to us. We'll try to sort those out over time. We do have one, which we'll get to in a minute. You guys have already asked about it, but that would be greatly appreciated if you can identify any others. But we think we tried to get most of them, but we know it's kind of like software, so there's always going to be something there that we didn't catch. So your feedback would be greatly appreciated.
Mike, I'll just add here that you know, in creating the SRT, and we talked about this a little bit earlier, but in creating the SRT, we were focused on making available to non-GAAP filers those elements that were required for the SEC supplemental schedules, as well as the certain other axes and their members that we determined had universal applicability. So something like range is non-GAAP, and in the end, we should be able to agree on a universal meaning for elements of that sort. However, there's clearly some overlap with the IFRS taxonomy on a handful of elements. So if you determine there is a better fit from the IFRS taxonomy, you should be using that first. So again, IFRS first, then SRT, then extend. Long term, as Mike has said, we'll continue to work on resolving any differences that exist so that we don't have selection issues going forward.
Okay, thanks, Lewis. Okay, so let's move to the next tag, the next question, please, on tagging. So this question has actually come up on the questions that have been answered online as well. So hopefully we can address a couple of these at the same time. So for certain numbers that need to be tagged separately, such as the useful life of property, plant, and equipment, the IFRS taxonomy only includes a string item type element. When tagging using the US GAAP taxonomy for these situations, often there is a duration item type element, such as US GAAP property, plant, and equipment useful life. That allows the number to be tagged without using a string item type. So for example, P1Y. So when tagging using the IFRS taxonomy for this situation, should the filer tag the number using A, the string element from the IFRS taxonomy, the US GAAP taxonomy element, or an extension element that has a duration item type attribute similar to the US GAAP taxonomy element? So Lewis, I'll give that to you first.
Campbell, so the correct answer here is to use the IFRS element, even though the data type may be less precise, maybe it doesn't seem quite right. But again, it's important to understand that the IFRS taxonomy has the appropriate underlying recognition and measurement. The US GAAP element here does have a slightly different meaning, and we could probably debate for some time how significant that is. But that's a very slippery slope. So at the end of the day, you want to be using first the IFRS element if it will work. And in this case, it will work. It does comply with the EFM requirement, which is 6.6.37. And the fact can be reported and should be reported in the proper format. So the element is a string, but that doesn't mean you can't and provide it in the format of P1D, P6M, or P5Y, or whatever the the duration is you're reporting. Granted, it doesn't have the precision of the data type, but it is the right element. And from an IFRS perspective, this affords the IFRS taxonomy team the opportunity to see this data over time and possibly make additions or changes in their own taxonomy. So, again, it's always better to use the IFRS element than the US GAAP element, particularly in cases where the element is based on different recognition and measurement, which is most elements. And I do want to address, one of the things we've heard as a different point of view on this is that, the EFM says you've got to tag numerical amounts in the financial statements. And I guess there's a perception that a string data type doesn't qualify as tagging a numerical amount. We do not interpret it that way. A string data type is acceptable for tagging numerical amounts, at least in these cases. Again, it's not as precise. And if you were a US GAAP filer and you had a choice between a duration item type and a string item type for the same item, you of course would pick the duration item type element. But you don't have that choice in the IFRS taxonomy. So make your best choice from the IFRS taxonomy and then go from there. Campbell?
Hey,
Mike?
Louis, just to add, for FPIs who may be new to this, the idea of tagging numbers in the report, there is sort of I call that a practical exception. If the number is descriptive, an example would be 2% milk. You don't need to tag the 2%. If you were describing a product, 500-foot pipe, don't need to tag the 500. So if the numeric value is used in a description, a product of some type, then that's not a value that needs to be explicitly tagged separate and apart from the product. Those can be just left as string types. Any other thoughts on this one, Louis?
Nope, I think that wraps it.
Yeah, we're getting lots of questions on this at the moment. I just one other thing on this is, for example, particularly with the duration item type, if something is in the US, something is entered as an element which is would be a duration, which would typically be a duration item type. So, for example, in this case, the property, plant, and equipment, and it is a string. The string makes it very open to what values you can put in. Should filers, if they see this case where it's clearly pointing to a duration, is it acceptable to put P1Y, or should they be describing that, saying, writing 1 year? What would be the preference in this case?
The preferred format, so I'm looking at one of the questions, I'll just read it as I see it. It says, with the string tag, would you enter 3 years as the words 3 years, or would you enter it as P3Y? I would enter it as P3Y.
And so this issue's come up quite a bit. So I think that's what we should take away from this. If it's a duration item type, follow the P3Y. Obviously, if you put 3 years, nothing's going to stop the validation. We would expect over time that the IFRS taxonomy would be updated to change those to duration item type. So just to minimize retagging, that's probably the best thing to do, and makes the data much more useful for people as well.
I think there's some other questions, maybe Campbell here, that are on the from the audience that directly relate to this. Maybe we could just take a minute and talk about some of them.
Okay, so let's just go through some of these then. So the first question that came in on this, there are a number of tags that are decimal item types in the IFRS taxonomy that would likely be things like per share item types or per units. There are numerous others in the IFRS taxonomy where the tag types do not match that express tag types the way the US taxonomy would. Should the unit type expectation be the same using these tag types? Should companies extend the IFRS tags with these tag types or not following this guidance?
So I think what we're dealing with here is the precision factor that Lewis laid out a minute ago. It's a string type in the IFRS taxonomy. It's not in the US GAAP taxonomy. So we're dealing with kind of different modeling concepts or foundational ideas in these two respective taxonomies. So it's not that the guidance contradicts, it's that the actual taxonomies have a different expectation as to how that is going to be described. And so we're trying to provide basically a workaround for the string-based option in the IFRS taxonomy.
Right. So, and I think for that question on the types, then for this one with the decimal item types versus a per unit item type, it's the same principle. You've just got really a data type which is broader than you would expect to see, in the US GAAP taxonomy.
Yep.
I mean, basically, if you can make the reported fact work with the data type, use it.
Okay, we've got a lot of questions on this. And do you want to go through these, Mike, now, or do you want to come back if we've got time?
Maybe come back if you have time, because I know we got CP questions and stuff in here. Sorry about that, I forgot.
That's right. Okay, so for the next item is, if we go to the next tag me. So this question relates to an EFM 6.5.26, and it's basically, this is the one that says an instance with a 10K, etc., must have at least one non-empty DI common stock shares outstanding fact for each class of stock or the units of ownership outstanding. And this is the question that had been asked before, which I referred to. So, and then this basically lists out what's in the EFM. And so the question is the statement of class of stock is not included in the SRT. There are other axes in the IFRS taxonomy, for example, class of ordinary shares axes and class of share capital axes. Both of these axes could be used in tagging the financial statements and footnotes of a document prepared using IFRS as an alternative to the statement of class of stock. Is the instruction for tagging the DEI information, that is, use the US GAAP statement class of stock axes instead of the IFRS elements, intentional? Or might we expect to see this change in a future version of the EFM?
Yes and yes. So this is the exception I referred to earlier, and this is the question I think people ask about. So this is an exception to use the US GAAP item here, but it only applies to FPIs that have multiple classes of stock, and it only applies to how they describe those options in the SEC's DEI information. We intend to, in a future release of the SEC reporting taxonomy, to include an access that's usable by both IFRS and US GAAP filers. And when we do that, the Edgar Filer manual will be updated with the change to the name for that access. But in the meantime, the IFRS filer that does have multiple classes of stock should use the US GAAP statement class of stock access for this requirement to avoid receiving warning messages from the validator. And this is what you should receive if you do file in this area, is a warning message, not an error message, a stop message, a fatal message. It just should be a warning. So if you don't use that element, you are going to receive a warning message, but it's not going to be a fatal flaw message. So just to repeat myself, this is a single exception for IFRS filers who have multiple classes of stock. This access is not in the SRT. They should use the US GAAP element statement class of stock access. And we hope to add an access in the SRT at a future date. And when we do that, we'll let you know the name of that access and how it should be used.
Okay, thanks, Mike. Do you have anything to add on that, Lewis?
I do not.
Okay, great. So if we go to the next question, please. So maybe this question for you, Lewis. Level 3 tags frequently require extensions since the IFRS taxonomy tag that may be applicable was already used for level 1 tagging. Cannot use the same tag in the same context. Is it acceptable to create an extension for the level 3 tag in this type of situation?
That would be the correct choice. And again, this is an excellent opportunity to provide feedback to the IFRS taxonomy team at the ISB to let them know about the elements that you're using and that you think need to be included in the taxonomy.
Okay, thanks, Lewis. So if we go to the next question on tagging, please, David. So in the IFRS taxonomy, all axes tags have the same generic definition. Is there further clarification on the meaning of these elements and which ones to use? There seems to be more axes element extensions when tagging with the IFRS taxonomy than the US GAAP taxonomy.
The last statement's correct. And the answer here is, this is basically the business case for filers to take advantage of the comment period for the IFRS taxonomy. And so if you've got something that you think should be in that taxonomy, that's a common term that you don't think it needs an extension to create it, then take advantage of that opportunity to comment to the IFRS Foundation and include your feedback to them as part of their outreach to the market. I guess I would add the same feedback for us at the SEC with the SRT. If you see concepts that should be in there, the same thing is teed up, and I think Lewis will talk about this in a minute, as the comment period for the SRT opens up later this year, and it's a great opportunity for you to provide feedback there as well.
Okay, thanks, Mike. Okay, go to the next slide, please, David. So these are questions, we've got some questions on validation here, or just the slide here on validation questions. So Mike, I'll pitch these to you. What does SEC validation check for? What does it mean if a filing passes this test? Hit that one first.
Sure, so the answer to number A is this is a technical validation only. This does not mean anything other than, the document is compliant with the specification and a few other minor technical activities. You should not take passing the test as anything other than that. It's not a commentary on the quality of the data that's in the report. It is not a commentary on the extensions. It is not a commentary on the relevance of the elements that were used in the report and the mapping to the taxonomy. So all of the quality issues for which the filer is responsible, the validation tests do not address those at all. And so, as I used to say, danger, Will Robinson, danger, danger. Do not overassume anything other than a technical validation for the validation tests. And sort of reading ahead here, Campbell, the technical validation is not, repeat, is not anything to do with data quality.
Okay, so then the second question, are there other validation checks available for the IFRS? What do they test for?
So, Campbell, it's probably a better question for you to answer, and I'll let you talk about it a little bit, but the XBRL US Data Quality Committee, who's done a pretty dang good job as far as I'm concerned in developing data quality checks for the US GAAP filers. We met with that team last week, and they disclosed that they are also working on data quality checks for FPIs in the IFRS taxonomy. Campbell, maybe you want to talk a little bit more about when those are going to be available and how people might get a hold of them.
Sure. So at the moment on the XBRL US website, there are a limited number of IFRS checks, and they basically mirror the ones that have been rolled out for the DEI taxonomy relative to the SEC. So they're kind of testing the same thing. So if you have any comments on those, or if you think there's problems or ways they could be enhanced, please put a comment onto the public review process. That finishes on the 7th of May, so you've got a few days. But the plan is then to continue to roll out additional checks, probably initially things like non-negative checks. They have not been done initially, just because we wanted to see what data how data comes back on the initial round of filings, how people are using it, and then we can see where people are making mistakes or issues or using tags inappropriately. So the intent is to start including non-negative rules for IFRS filings initially, and then as we see issues in those filings, we'll continue to expand those in conjunction with other tests that are also being rolled out for the US GAAP taxonomies. Just so you know, for 2018, those rules have also been updated to cover the SRT taxonomy as well. So you can go to the website, you can look at the rules, you can test run them. If you've got an IFRS filing, you can run your IFRS filing against them, see if you've got any issues. If you have, that's fine, it's still public review, but then come back and either A, if it's a problem, fix it, or B, if you don't think it's a problem, put a comment up. So we go to the next question. So just some general clarifications. So can you clarify the legal liability risk of XBRL tagging for IFRS? Is it the same as the paper-based filing?
Yes, absolutely the same liability as paper-based filing, absolutely.
The next question, please explain how signs should be used. For example, are most element input as positives?
Yes, most elements are input as positive. There's exceptions to that, but that is the nature of the taxonomy. I was looking at a filing recently where the company had recorded a contingent liability that has a natural credit balance, and that balance was entered with a negative value, thereby creating a contingent asset. The exact opposite of what the filer intended. So that's an example of how you need to pay attention to the signage. It's a good lesson learned. There is staff guidance on this. And I guess I would also point out that the XBRL US data quality rules do focus on the negative positive values, and Campbell mentioned those will be forthcoming.
Thank you. And the final question, should the rendering of the XBRL data and the paper-based filing be identical?
We've been pretty persistent on this point that the rendering presentation is not relevant. Filers should not alter the structure of the XBRL to force a rendering topic. So if they're not exact, then don't worry about it. You can use render sometime to see if you've got something that's kind of really messed up, but that's just a potential flag, not an absolute flag. So the short answer to that, should rendering be identical? The short answer to that's no.
Okay, great. So we go to the next slide, and this is a question on calculations. So the EFBM requires calculations in XBRL files. However, in XBRL, although you can create a calculation for most items, for which paper-based copy shows the numbers in a mathematical relationships, there are certain restrictions whereby XBRL can't create a calculations. Calculations can't be created in XBRL primarily for items such as roll forwards. And when different member tags are used to disaggregate a total amount, when are you not able to create a calculation? Lewis, maybe this is a question for you.
Yeah, so the question seems like it kind of answers itself, but I'll expand on it a little bit. So the basic rule is that elements included in any particular calculation must all be of the same period type. They must be all instant or duration. You can't mix instant and duration period types. And the EFM has a specific rule that talks about this, 6.14.3, but it also would violate the basic XBRL international specifications. Now, in the general case, when you're summing a breakout, let's just say assets, it makes sense that the period type must be the same. But this can become a concern when you need to create a calculation for a roll forward that mixes instant facts, so point in time facts, with duration facts, so the changes in the account. So the XBRL calculation specification doesn't currently support this type of summation. So if you've got a contra account, or you're looking at accumulated depreciation, beginning balance changes to ending balance, as a good accountant, we all want to be able to create a calculation that takes us from beginning balance to ending balance. But that is a calculation that the XBRL specifications do not support, and you can't create that today. Additionally, calculations simply do not work across axes, across dimensions. So axes are most commonly used for disaggregations, but the calculation specification does not provide a mechanism to mathematically prove that summation. So, as an example, where revenue is disaggregated by products and services using an axis, there is no way to validate the summation using the calculation specification. Now, this isn't a reason to exclude the calculation for the report-wide values, the default values, but understand that this may result in calculation inconsistencies. Important, calculation inconsistencies are not a reason to exclude calculations. I know it drives a lot of us crazy that those calculation inconsistencies exist, but they're very common when you've got dimensions included in the filing. And from a user's perspective, having the calculation construct, even with the inconsistency, is better than not having it at all. I should point out that XBRL International has undertaken a project to revise the calculation specification. I call it the calculation specification. It's part of the base spec. But they have undertaken a project to revise this part of the specification to address these particular issues so that in the future, we will be able to accommodate calculations with mixed period types, across roll forwards, across dimensions, and so forth. Campbell?
Thank you, Lewis. So if we go to the next slide, we've just got some general questions, and we could wrap up. These are the poll questions, and we can come back to some of the open questions in the queue. So if we can get through these quickly, that would be great. Are there any foreign private issuers who have used inline XBRL?
Yes, Philips from the Netherlands has. And for those of you who are interested, there is an RSS feed on the website that provides you with all inline filings under the voluntary program, including those by FPIs.
Great. Next question is, when will the SRT be versioned again, and when does that comment period begin?
So the SRT will be versioned in a similar pattern to other SEC taxonomies, meaning no more often than annual, but cycles could be skipped if no changes are deemed necessary. So, think about the country taxonomy as an example. It doesn't get revised every year. So unlike the GAAP taxonomy, which changes as often as once a year to reflect new accounting standards, we do expect the SRT to stabilize and require very few changes in the future. With that said, and given that we are in the first lease of the SRT, it is not unreasonable to expect changes for 2019. We haven't yet identified any must changes, although there is one we talk about on this webinar. But assuming there are changes to the SRT, we will expose those changes in the September-October timeframe for a 30 to 60-day comment period for inclusion in the 2019 release. If there are no changes, filers would continue to use the 2018 SRT in conjunction with subsequent GAAP or IFRS releases. I'm also going to take this opportunity to remind everyone that effective January 1 of this year, proposed taxonomy improvements for proposed accounting standard updates in the GAAP taxonomy will have a formal comment period concurrent with the issuance of that proposed ASU. This replaces our past practice of an annual 60-day comment period on the entire taxonomy that usually commenced around September 1st of each year. So you will not see that draft US GAAP taxonomy in the late summer, fall timeframe as you have seen in the past. That is replaced with an ongoing process of taxonomy changes, proposed taxonomy improvements that are concurrent with the ASU improvements. Mike, Campbell?
Yep, maybe the last one, if a filer has questions, they can contact the SEC. We have it on our website, contact us. The email address is structureddata@sec.gov. We'll handle technical questions about the taxonomies and specifications. I would encourage filers to contact the Division of Corporation Finance with any filing-related questions, when to use which form, when to file, and if a filing requires tagging. Otherwise, reach out to us at structureddata@sec.gov.
Okay, so thanks, Mike. Let's go to the final CPE questions. David, do you want to bring those up, please?
Great, thanks, Campbell. Thanks, Mike and Lewis as well. Two more poll questions or two more CPE questions. The first one is coming up right now For FPIs, when searching for an appropriate element, you should follow which sequence? Check first IFRS, check second SRT, or check first SRT, check second IFRS, or check first IFRS, check second US GAAP, check third SRT. What's the sequence if you're an FPI searching for an appropriate element? Take another couple of seconds to make your decision about that. And we'll move to our last polling question in just a couple of seconds. I'll end it here and slide on to the last polling question. Which of the following statements is false? The IFRS taxonomy and the SRT taxonomy have some duplicate axes. Rendering of the XBRL and the paper-based version should always be identical, or there are no US English labels in the IFRS taxonomy. Which of those statements is false? And just a reminder, as you're making that selection, the replay of today's session is posted on our site. I should say will be posted on our site. Just go right back to the page where you registered or where you linked off to register for today's session. Had a question about posting these slides. They'll also be up there at some point today, so you'll be able to download the questions. Someone else during the session also asked about an FAQ, and I think that'll be in the works from XBRL US based on much of the discussion that was had here today.
All right. So we've got 1 minute. So I think we have time. Oh, we still got the poll going. Okay.
Yep. Awesome.
All right. Thank you for answering the poll questions. So just time for one last question we've got here. Is it permitted to use the same schema files from one US GAAP taxonomy and others from another US GAAP taxonomy, as long as they are both on the current approved listing? Some initial thoughts were that you could either use one or the other and are required to use the schemas in the listing for each individual taxonomy and not mix them. For example, companies use the 2016 currency schema and then use all the other 2017 schemas.
I think the preferred concept would be to use the same schema, not to mix, especially the GAAP taxonomies. If there's not a 2017 taxonomy, say for currency or something, you can use the most current one, but you shouldn't be mixing and matching if there are the taxonomies in the same period, same year, same release.
Right. And one of the things that we've seen just even with the 2018 filings is people using the DEI 2014, and there is a DEI 2018. The SEC gives the approved list of taxonomies. Those approved lists should be used together. You can't mix and match between them. So that so the same would go for IFRS and the SRTs. You don't want to at some point use the IFRS 2016 taxonomy and the 2018 SRT. And we mentioned that earlier, don't use the IFRS 2017 taxonomy and the SRT taxonomy at this point. Okay, I would like to thank our guest speakers today. There were lots of good questions and thank you for your insight. I'm sure it's much appreciated by the audience today.
Thank you, Campbell.
Thanks, Campbell, for hosting this.
Thank you. Thank you, everybody, for joining.